Welcome to the Active Value Investor channel. My name is Victor, and in today's video, I'm going to be covering Kroger. This is the big grocer that you may be familiar with. I've been an investor in Kroger for some time. I'd like to analyze the company in this video, give you my conclusions on how I feel about this stock. I like to scorecard my investments, and it involves 5 questions followed by 1 action item. Is it a good industry to be in? Is the company operating and performing well? Is debt less than 3 times EBITDA? And I want to discount the stock. That way I could see my investment go up in value. Based on those 4 questions and the responses to those questions, I then decide whether I should buy, hold, or sell my shares. Let's take a look at third quarter earnings, which was the last full quarter that was reported by the company. Identical sales were really good. I'd like to see a company grow the top line. They also grew digital sales by 10%. That's really important, basically, because so many things are going digital. Also, they provided guidance, and it's good to see that full year they expect to grow a little over 5%. They're going to have good operating profit, and they gave us guidance on free cash flow for 2022 full year. Over the last 5 years, the Kroger stock has done quite well, considering that you're being paid a dividend and you're up 53%. It's also bucked the trend that we saw in 2022, where stocks were really hammered down. They actually did really well right after the pandemic, rose, to a really good high of over $60 per share. And then they've come down ever since. Looking at the 1 year, you could see that it's really come down from its high above $60 per share and trading for $45 a share. Not the worst loss really of 2022. But one thing I'll point out, in the last 10 months, they're down 27%. As an active value investor, I'm looking for opportunity to buy into companies that I believe in. And this might be a good opportunity to take a look at Kroger. I value companies based on the current intrinsic value of all their future cash flows. Put together a model where I can discount all those future cash flows based on the criteria as follows. First, I'm taking their guidance for 2022, which was that they would be between 2.3 billion and 2.5 billion, taking the middle, 2.4 billion. As a starting point for the first year, I'm going to grow each year after that by 6%. Feel comfortable with that number. It may be a little conservative, but I feel comfortable with 6%, 2% for perpetual growth in the company. The weighted average cost of capital provided by Finbox is 8%. Based on that factor, my model takes all those future cash flows we expect, as well as the terminal value, and it comes up with a value for the company of 41.7 billion. But their currently market cap is 32.2 billion. Their share price is $45 per share, but I believe their intrinsic value is $57.67. So it provides a nice little discount on the stock currently. On their balance sheet, they have little debt. Their debt to EBITDA is 2.83, below that 3x, metric that I'm looking for. So to summarize, the performance of 2022 is very good so far. They had good growth in Q3. Free cash flow is down. They had an increase in inventory in their stores, as I expected that, because their stores, during the boom year of 2021 and the beginning of 2022, boy, people were just buying things off the shelf till they were empty. So it's logical that Kroger has to increase their inventory. Hopefully that's a temporary item. And they paid their dividend of 2.31% currently. 2023 guidance, small growth as expected. It's a grocer. Free cash around 3.5 billion. That's my number. That's what I'm expecting. Acquisition of Albertsons, it's a pretty big grocery acquisition. That should be done in 2023, so that should bump up their overall revenue. And then my outlook is that the stock has gone down significantly, so it's really interesting to look at the company now. There's moderate upside and a good dividend paid, and there's some confidence in the fact that Warren Buffett owns KR. So taking a look at Kroger and putting it through my scorecard, it's an industry that I want to be a part of. It's good, stable industry. This is the only grocer that I own, but it's a good, stable stock, boring, but makes me money, appreciates over time. The company is operating and performing well, arguably the best grocer in the US. Debt is less than 3 times EBITDA, and I'm getting a discount on the stock. Therefore, I'm a buyer of Kroger. Thank you for watching the video. I hope you found it interesting and discovered something new about Kroger. Keep in mind, I'm not recommending you buy Kroger stock. I'm just sharing my experience as a small investor on YouTube. Thanks again for watching. Good luck investing in 2023.